Excellent. So thank you so much for having me, Anka and David. And so today I'm going to talk about the boom and bust cycle that we see with traders. And the reason why I decided to talk about the boom and bust cycle, no, yeah, that's the word, is because I recently had traders three traders who had that problem that they wanted to overcome. And it's really interesting because I seem to get like batches of problems, like batches of traders who don't take their losses, batches of traders who don't let their profits run. And this, you know, month was all about traders who make really good profits and then lose it all in one trade. Like, what is going on here? And it's been really interesting for me, wondering if that is maybe because of the market behavior. So right now, the market, as we know, is just so mega volatile. And I see a lot of traders doing well. But when I then look into the detailed statistics, the MFA and MEA, so how far they let the trade run into a loss before it runs into a profit, or how far they let the trade run into a profit before they actually exit the position, so how much money they leave on the table, I can see clearly that there has been a little bit of a bad behavior sneaking in. And the bad behavior is they let their losses run knowing that the market will come back and save them. So that is a very dangerous behavior because it works 9 out of 10 times. And then the 10th time is the moment when, it goes so far into a loss and it doesn't come back. Now, that happened to me several times, obviously. Like, if you haven't experienced it as a trader as yet, then you're not a real trader. That's what I always say. So the question is, why do we actually do that? And most importantly, how can we stop it? The traders who have been coming to me with this kind of experience feel, of course, incredibly frustrated. They have, an 80, 90% profit loss ratio. So they're doing really well. They know how to trade. And it's this one trade who really screws up everything for them. And then they stay, below the profit line, the 75 or 90%, we are still debating about that, losing traders and the 10% winning traders. So if only they could stop this boom and bust behavior, so taking their losses on time and not letting one or two trades really run out of control, they would be easily in the top 1% of traders. So the question is, and they know that, right? They're really clear about that. The question is, why is that so? And a very common tweet and, a very common sentence that I see in books is, you have to learn to accept your losses. Now, what does it even mean, accepting your losses? What does acceptance even mean? Right? So logically, I know that, but I can't feel it. No, I am in a loss and I'm feeling so bad about the loss for whatever reason. And I feel incapable to press that little mouse button, which doesn't make sense to me, right? I'm like, it's just a press of a finger. Like, why doesn't my finger want to obey? And so logically, again, it makes sense. And you tell yourself, I have to get out, I have to get out. But it's like your body is paralyzed, your finger is frozen, and you don't press that mouse button. So what is going on there? And this is what we're going to explore today. And hopefully it will be so useful for you guys to start working on that and to start letting go of that behavior, because you understand what's driving it. You have to understand that in a nutshell, and Denise Schall always says that, I was on a trading battle with Denise Schall. It was so much fun. Oh my God. So Denise, always points out that it's your emotions that cause your behavior. And that's why when you want to resolve a problem that's a behavioral problem, to solve it in the behavior, going to fix it. So, the trader might say, oh no, I have to be more disciplined. I have to have more willpower. I have to, just force myself and just do it. If that were so simple, everybody would. And we didn't have the statistics that we have in trading. So that means that the solution lies not in figuring out how to force yourself to press that mouse button. The answer is looking at what is driving that thought pattern, what is driving that behavior or non-behavior. So when I say behavior, I'm talking about, let's say, going on tilt or martingale into positions. Non-behavior is, or even cutting your profits short. Non-behavior is not taking the loss or not getting into the trade. So we can see those two types of behavioral patterns, the things you do and the things you don't do. And what I found with most of my traders is that they either do the one thing or the other. It's rarely that they're a type of trader who lets the losses run and is afraid of getting into a trade. So someone who doesn't, someone who does things or doesn't do, no, sorry, let me start it again. So it's rarely that I come across a trader who has the non-action behavior and the action behavior at the same time. So when we have someone who doesn't let the losses run, it is rarely that doesn't let their profits run. It is rarely that they also show the behavior of being afraid of pulling the trigger or getting into the trade when the strategy has triggered an entry. So that's already great. That's already where you start. You look at yourself, you look at your life, you look at your trading behavior and other behaviors as well. Are you typically someone who's shying away from taking action? Or are you someone who is maybe jumping too fast into taking action, gets stuck in it, and then doesn't get out? And so that will be a pattern in your life that will give you feedback on how you behave in your trading. By the way, guys, if you have any questions, please type the questions. I rather answer questions and get the conversation going still on the same level. I will still get my content across, but in the context of questions, because then I also know that I'm really hitting a spot for you guys. And I know that my presentation is super useful for you guys. So now, when you are someone who takes, who doesn't have that behavior of letting losses run too far, then try to take the content and the structure of thinking and the framework of thinking that I'm presenting and put it into your context. Yeah, so get out of the detail focus and the story and listen to the way I'm thinking, the way I'm presenting the cause and effect in our behavior. It's the same with, for example, Linda Rushke, right? She is an incredible mind, and she has this way of looking at the world that is, she's able to, take different dimensions and different topics and understand the correlation between them. I don't have that mind. I'm very detail focused. I'm very story focused. I found it always hard to think in frameworks, but I trained myself to do that because that's where the solution lies for everything in life. If you are right now in your life at the stage where you just make one bad decision after another, I would like you to have a look at, do you always just listen for the story? Or do you think about, how does this person think that I can learn more? When you have to make a big decision in your life, or when you have to make a trading decision in your life, do you look at the story and the content, or do you look at the big picture of what is going on and the framework of thinking? So let me give you an example. Linda would say, in the mornings, the market behaves differently than in the afternoon. So in the morning, if she trades short term, and that's the thing about her incredible mind, she can trade 1 minute charts and she can trade 1 month charts. She's so versatile, and not many traders have that. So I don't have that. And I'm very aware of what my strengths and what my weaknesses are. So I think about the way that Linda thinks and put that into my context of my strengths. So as I said, so she says in the morning, the market behaves differently to the afternoon. In the morning, the 5-minute chart is more powerful than the 15-minute chart. In the afternoon, she goes up to the 15-minute chart and then ditches the 5-minute chart because price behavior has changed. Now, if you take that literally, you will never be able to succeed as a trader because Linda thinks and works differently. But if you take that as a framework and you say, all right, so what's the pattern of thinking? Price action behaves differently at certain times of the day. So Linda calls it time of day function. And now you can use that concept of thinking and apply it in your trading, because for FX it's different than for commodities, it's different for futures, it's different for stocks. Now, another framework of thinking that Linda has is your time of day function of your own personal behavior. And when you look at your P&L, what most traders do is they look at their performance stats, if they even look at their performance stats, not many traders do, in terms of monthly or weekly. But if you start looking at your performance stats in terms of the day, when is the best time of the day that you're trading? Is your performance in the morning different to your performance in the afternoon? And you will be surprised. Most of my traders that I do that exercise with, they are doing better in the morning, whatever their morning is, right, than in the afternoon. So now we can look at, let's stop trading in the afternoon. What would happen if you were to stop trading in the afternoon and spend time with your family? Well, the fear of missing out kicks in, right? So great. So now we have a mindset problem that we can work with. So that's what I want you to listen to me in terms of not only the content, but also the way of thinking. And when you do that, I guarantee you will be able to apply anything to your life, and your whole life will change because you will be able to make better decisions. Now, let's go back to, what does accepting a loss even mean? And so acceptance in my model of the world, because I thought about it so much, I got so frustrated when my coach at the time, over 10 years ago now, would say to me, you just have to accept the loss. I'm like, I know, I'm hearing you, but I don't know how to do it because I'm in so much pain. And my story was that I was in a really bad state of my life, like it was horrible. And I couldn't accept a $20 loss. Now, the $20 wouldn't have sent me broke, but there was something in me that just could not take any loss. And telling me I just have to accept it was just making it worse, because what he actually said to me was, there is something wrong with you and you need to fix that. Well, that's what I made it mean anyway. Now, accepting in my model of the world means not wanting it to be any other way, not fighting it. And so when we talk about fighting it, we all have, the experience of the monkey mind who says, if you take that loss now, where there was my monkey mind, if you take that loss now, I guarantee you it's going to turn around and go right into profit. And I would have this mental imagery at the same time, actually seeing price turning around and going to profit. How crazy is that? But I wasn't aware of it. I was so in emotional upheaval that I wasn't aware of my thoughts, and I wasn't aware of my mental imagery. So if you have that experience, I would like to invite you to start becoming aware of it. Because what happens in that moment when I thought, oh, it's going to turn around, where was I? Was I present in the moment? Or was I already anticipating the future? Of course, I was in the future. Now, we all know nowadays that where does our power lie? Only in the present. So the trick is, which is part of learning to be accepting of life, is to bring yourself back into the present moment. Okay, I screwed up. I feel all the feelings that I'm feeling with it, and that's okay. I can be with it. I need to take my loss, reposition, and then get on again and start, again, find another trade. So, sorry guys, I have to turn off my light because it's really hot. Oh, it's too dark, is it? Okay. All right, then I just have to feel hot with the light. It's like almost like sauna. So the trick, the step number one is always awareness. And awareness is incredibly hard when you're in the roller coaster of emotions. But I promise you, just do your best. Just start with a tiny bit of information. Okay, right now I'm feeling, I don't know, I just feel upheaval. Start with that. And then, okay, that upheaval feels really bad. It actually feels bad in my stomach. Okay, so, I'm actually feeling like I feel so helpless. Right. So when you when you start naming the emotions, there's something going on in your brain and the processing power, where the moment you name them, they start losing the power over you. Why that is so, no idea, but research has shown that this is the case. And that's the only reason why I would do that, right? For no other reason. Then the mental imagery was really important to me, because you can imagine, if I already anticipate the market turning around the moment I get out, this is so self-defeating. And also, what does it even matter? It has no impact on my trading. It's one of the things of focusing on what's called a safe problem. So a safe problem is something that is trying to, when my mind is trying to protect me from feeling pain. And a safe problem is a problem that we create in our mind that is not really a real problem, a logical problem, a rational problem. And that's why we keep stuck in that behavior. Now, the risky problem is then what? Right? So what is the risky problem in that moment? And so the risky problem would be taking that loss and feeling all the feelings of feeling stupid, feeling not good enough, doubting myself. Will I ever make it and achieve my dream? Will I ever have what I want from life? Feeling disempowered. All that jazz was going on in my emotional washing machine. And to then look at, so what beliefs do I have about myself? Obviously, the belief that I had about myself was that I'm not capable, that I'm not good enough. And now I can start questioning myself. Is that really true? Right? Is that really true? Actually, no, it is not. Well, maybe right now I'm not capable because I clearly, didn't do well with my trading, but that doesn't mean anything about me. All that means is that I have to go back to the drawing board and start practicing my skill a little more. So now, how do you start practicing your skill? You look at 3 areas. Is it a mindset problem? Is it a skill set problem? So you have a strategy that works, but you don't know how to apply it properly in the market. Like in hindsight, right? I have this trader, and he keeps sending me charts of, oh, the entry would have been here, like it was a triangle something continuation pattern. Exactly, entry would have been here, and like heaps of charts. And I said, yeah, in hindsight, we are all heroes. Would you have recognized the trade as it unfolded? And then I sent him charts of the trade before it actually played out. And I said, where's your entry? He could not tell me where the entry was. Right? So that shows me that, yes, he knows what he wants to trade, but he needs to develop that skill of actually doing it in real time. It's like playing tennis, right? Everybody knows how to do a forehand, how to play a forehand. But to actually be in the game and then running around and playing your forehand cleanly, that's a different story. And so you have to imagine it's the same with the trading methodology. And so that would be a skill set, or is it just experience? So we have seen a lot of traders who did super well in the last few years. It was a bull market. The market was relatively easy for traders who were, of course, bulls and who were continuation pattern traders, and not so much the rebels and the reversal pattern traders. But they made a lot of money. And then the market behavior changed. And they were like, oh my God, I have no idea what to do with this market. But they didn't stop and practice and learn trading that market. They kept doing the same thing over and over until the losses became so painful, until they eventually reached out and asked for help. So in this case, it wasn't a mindset thing. It wasn't a skill set thing. It was simply the market environment has changed. And so you don't have the experience, and you have to train that experience. It's kind of like what I find amusing in Germany, where I grew up. We used to go skiing a lot in Switzerland, in France, in Austria. So I knew how to drive a car in snow, in rain, during summertime, because I was confronted with having to learn that. Now in Australia, where I'm not right now, there's only certain areas where there's snow, and it's amusing to see when people drive for the first time up the mountain and they have never experienced snow, and then they're crashing and ending up in the ditch because they didn't realize that driving in snow with the tires they have is not the same thing as driving in rain or driving during the heat. So And that is very similar. Now, once you identified, so that's actually the work that I do with my traders, right? So once we identified what kind of problem we have, now we can start working with it. Now we can go into performance improvement. What I see with most traders is they come to me and they say, there's something wrong with me. I have a mindset problem. Help me fix it. And then we look at their charts, we look at their performance, we look at their, so I literally go with them through their losses. And then I can tell you 50% of them is not a mindset problem. So for example, I have one trader that I'm working with, phenomenal trader, really interesting guy. He is trying out for one of those online prop firms. The daily loss limit is $1,000. Now he thinks that's not enough. I'm like, dude, I don't have $1,000 loss limit in my personal trading. Like, you're lucky. That's a lot of money. But he thought it as a limiting factor. Right? So he thought, if I only had a bigger loss limit, then I would do better. The reason why was because he was afraid of giving his trade enough room to actually take off. So he would get out really quickly at a loss or at a profit, and then would see the trade taking off without him. And of course, we all know what happens next. Utter frustration, disappointment. If I had let my trade run, I would be out of my job much earlier. Now I'm still stuck, in that treadmill and that spinning wheel and don't know how to get out. So all these self-defeating thoughts of frustration, disappointment, feeling of failure, and being stuck and never being able to live his dream. He's also mid-40s, so he's like, my life, I'm now in the second part of my life. How much time do I have left to actually enjoy life? So all these things are feeding into what's happening next. He's going on tilt. So he actually came to me, I'm always going on tilt. Can you help me fix that? And then I looked at all his trades where he went on tilt. And with no fail, it was always preceded with having a trade that he mismanaged. Trade went off without him because of his mismanagement, frustration, and then forcing himself onto the market and raping his bank account. I literally like a little kid in a China shop, just being really angry. And so he kept repeating challenge after challenge in that online prop firm, and they made so much money on him. Like, I've got one guy, he had $10,000 spent with them trying to pass the challenge. So, take the $10,000 and trade your own account and trade on a small size. So with this guy, what we did is it was clearly his risk and money management and his thing that it's the limitation in his life, doesn't have enough time, doesn't have enough loss limit, that he thought is the problem. But it was only his money and risk management in this extremely volatile market. So when I worked through with him how to manage that differently, and having a solid money and risk management strategy for the volatility, and having it in such a way that it was easy for him to adjust according to volatility, because the volatility has shrunk down tremendously at the moment. So, you can go back in with bigger size, but during the time when it was crazy, like we had like 50-point bars on the DAX, 1 minute bars on the DAX, you can't go in with a big position if you don't have a really big account. So that helped him to capture so much more of his profits. We now have to work on his profit management and trade management, but he's, increased tremendously already. And that has reduced him going on tilt, oh my God, I think by 80%. So you can see it's not always a mindset problem. It can be a skill set problem. Now, the boom and bust conversation, so that was the boom and bust conversation that we had with him, because he would do well, then mismanage a trade, leave money on the table, and then go on tilt and literally not stop until his account was depleted or he was being kicked out of the challenge. So that's why I was saying like a child in a china shop, just throwing stuff. That was actually what his wife coined his behavior. So I thought she was really spot on. He has an amazing wife. She's so supportive, and just really beautiful to see when you see couples, championing their partners in their dream. And so I just really love that. Did he ever pass the challenge? So the good news is, I just started working with him 2 months ago. The good news is he's still in that challenge. So he hasn't bombed the current one as yet. I say as yet because it might happen. And I'm not afraid of it happening, because I always say to him, I want you to make all the mistakes now so we can work on it. And he's a little bit of a perfectionist. He's afraid of making mistakes. And I will explain to you the reason why afterwards, a little later. So we still have plenty of time. But yeah, he is still in that current challenge. So go him. He's improved so much. What has improved even more is his mental well-being. His stress levels have reduced. You know why? Because he now knows that he will eventually make it. Yes, there might be more for him to work and to learn through, to work through and to learn, but he knows that when he screws up, it doesn't mean that he will never make it. It doesn't mean that he's a bad person, that he's a disappointment to his family, or that just no. All it means is he has to go back onto the drawing board and figure out what he has to work on so that he can improve, and then he will really become the trader that he knows he has the potential to be. Phenomenal guy. Now, he is not a systematic trader, which is really interesting. He is a very discretionary trader. And I said to him, so how did you identify so he trades turns, right? He's really good at picking bottoms. And he trades short term. He just trades the opening of the NASDAQ because he has to work full time. So he only has the first hour and a half to trade. And luckily he's in a country, in a state in America where the time difference is such that it allows him to trade before he starts working. Now, he couldn't explain to me how he actually does the entry process. Like, there is no if-then structure for him. If price does this, if the candle looks like that, if the level is like that. It was just all intuitive, which is amazing. And I'm not taking that from him, because what he's doing works. He's like, I don't know, I can't tell you, but it feels like it's going to go up here, or it's going to go down. And like his stats are fantastic. Once we took out the stats for how would you perform if you would take those trades, those going on tilt trades out. And he was just doing extremely well, like a profit factor of 5 or something, like phenomenal. And that really opened his eyes, because the thing is, when you feel bad about yourself, the really weird thing is the thing that would actually work is not what you feel like doing, and you can't get yourself to do that. Really weird thing. So he had to look through his statistics to get feedback. And it took him 2 weeks to send me his stats, because there was so much pain around it and so much shame. And even though I showed him, I said, look, I've made all the mistakes and still make them. And I know what it's like. I know the feeling, I know the pain. So it's completely safe. I will never judge you. He still found it really hard to send me them. And then once he got over it, and he did, and we went through his stats, he was like free. He was like, oh my God, that's amazing. And I loved it so much. When we went through our stats together, so many insights and so many eye openers. And so now he can use his own stats to give himself feedback of how he's doing and where he needs to work, what he needs to work at. So that was with this guy. Another trader that I was working with, or I'm still working with, just started working with 2 weeks ago, exactly the same. So he's doing well. So he has a really good trading performance statistics platform. He's here in Australia, and you can see his profits. They're very consistent profit, 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 and then bang, big loss. And it's just one stock that he doesn't get out. And he found so incredibly hard to get out. And I said to him, okay, so what's stopping you from getting out of this trade? And he said, well, if I get out of it now, I'm going to destroy my beautiful performance numbers for the month of May. But we still have another 2 weeks to go, I said to him. And how does it even matter? You know, like you're a retail trader, exactly, small wins and one big loss. So that was the pattern every month. Small wins, one big loss. Small wins, one big loss. You can see how frustrating that would have been for him, Martin. So yeah. So he said, well, then I'm doing so well, my performance stats are going to be screwed and look ugly. And again, that's a safe problem, because performance stats really do not matter. So monthly performance stats do not matter for a retail trader. They matter if you're a hedge fund and you have to report to your clients every month. And they matter for a prop trader because you get paid on your monthly performance. Right? So when my hedge fund guy, who over in Switzerland has a several million drawdown, or 10% drawdown of his portfolio, he really needs to worry about, how do I manage my clients now? What do I write into my report? Because if my clients are afraid that I lose their money, they're going to leave me. They're going to take their money out, and then I won't be able to run the hedge fund anymore. So you can see, for a hedge fund guy or prop trader, that thought of it's going to destroy my beautiful stats is not a safe problem. That's the real risky problem that needs to be dealt with. So again, I work with him on what else is stopping you, to press that mouse button. And so the thing was, he was already so deep in a loss that it put a big dent into his account. And all he could focus on was what he had lost. And so he looked at the past, the regret. I have lost all that. And if I realize that loss, that's another horrible saying, right? A loss is only a loss when you have realized it. Oh my God, that has bombed more accounts than any other saying, in my opinion. And so that's exactly what he thought. It's like, it's only a loss if I realize it, and I hope it's going to come back. And look, there's another level, it's going to find support here, or it's Fibonacci, or look at this reversal pattern. And then, in the last few months, no bullish reversal pattern would hold. It was just continuing down, and that was lack of experience, because he's only been trading for 5 years. He has never been in a violent market like we have now. Now, Anka and I, we have been through 2008. We know what it's like, right? The waterfall. Do not stand in front of the train kind of trading, and go with the flow. So part of it was us working on his experience and going through trades in 2008 and looking at what worked in 2008 that we can take over here into 2022. Also March 2020, but March was just 1 month, in 2020. So it wasn't really easy to benchmark that in terms of behavior. Whereas 2008 was literally, 2 years of market mayhem. So much better area or part of the years to practice and study how to improve your performance. Now, that brings me to another really important topic. And oh gosh, I wish I had known this when I started trading. So when I started trading, I took a long time to go to break even, like 7 years. And the reason why it took such a long time was, number one, I started going in with arrogance. And I remember the guy that I learned trading from, which turned out to be a marketer and not a trader, was really funny. He actually stole the training program from a very famous options trader here in Australia, David. forgot his surname, unfortunately. Such a nice guy. Really, I met him years later at a charity function. So he stole his his training program and literally did a massive, awesome marketing campaign. And you know what it's like, right? So when we are good at our craft, we are really good at marketing. So David was not very good at marketing, but again, he's an amazing trader. Now, this guy that I learned from, amazing marketer, not a good trader. So he would just reciting out of David's training program. And I paid, I think, 25 Australian dollars for all his trainings at the time. Like, got so ripped off. But one thing he said to me, he said, or he said to all of us in the audience, like what everybody would say, you know, discipline is one of the biggest problems in trading, or the lack thereof. And I would be very arrogantly saying, ha, I'm German, you know, we Germans invented discipline, not going to be a problem for me. Oh boy, little did I know. I ate a lot of humble pie because I thought discipline is about following the rules, like in day-to-day life, like do not walk on this lawn, or stop at the red traffic light and don't cross this, don't jaywalk, which I would never do in Germany, funny enough, but I do all the time here in Australia because the culture is different, right? It's more acceptable here. But yeah, I didn't realize that lack of discipline is all about the emotions driving the behavior or the lack thereof. So every time I say the lack of behavior, I talk about not taking your losses and not getting into a trade. So yeah, that was a real big eye-opener for me. And then I realized that I was very neurotic, meaning highly emotionally volatile. So with what I came into trading, I had no chance of succeeding. I felt bad about myself, had a very low self-image, hence my bravado to the outside world. Oh, you know, I'm German, I can make it. But deep inside, I felt, you know, like this little useless, incapable soul. And I wasn't even aware of it. That's the funniest thing. I didn't realize how negative my self-image was. So it only came out when I started trading. So then I went on this journey of personal development, and I became a coach and wanted to better myself, and that was awesome, right? It was really good. But the part that I was lacking, and that's why Linda is such an eye-opener. If you haven't listened to Linda Rushke's podcast with Stephen Goldstein, Alpha Mind podcast, you need to listen to it. It's just so amazing. And again, I wish Linda was around when I started trading. I just didn't know about her, so my life would have been very different. But hey, it is what it is. So in the pod, and that's the thing that I learned from Linda. What most traders don't do is they don't really study the statistics around their trading system. Why do they have an edge? And it's something as simple as not just around, it's if they do that, they study it around their trading system, but they don't study it around the context of the market. So I'm what we call a mismatcher in neurolinguistic programming. So when you say to me the sky is blue, I have the urge to say the sky is gray. If you say the sky is gray, I have the urge to say, no, look, there's some blue spots here. So that's what you call a mismatcher. And again, I was so unaware of myself, and I must have been so incredibly annoying to my friends because I was always taking the opposite side for no good reason. And so I would trade like a mismatcher, meaning I would take always the opposite. So the market would, I would always looking for mean reversion or reversal patterns. Now that works beautifully in a sideways market. So that's understanding the context of the market, but it doesn't work in a strongly trending market like we had 2009, 2016, and 2021. So it doesn't work in a strongly trending down market, waterfall market like we had 2022. I learned it the hard way by losing a lot of money until I finally got that, oh, my system doesn't work in this kind of market. It's not that there's something wrong with me. My system doesn't work. But it didn't occur to me. I really thought there was something wrong with me. So I kept navigating and navel gazing, and I did not do the other part of the work. So it's kind of like you only work out your arms, but you don't work out your legs, and you don't work out your glutes, and you don't work out your core. Like there's 4 different parts that you need to work out that have all a different function. So what you need to do is you need to look at how does market behave. And Linda suggests, for example, when you have the market, the price action, take out the previous day's high, for example. What does typically happen the next 5 minutes after that? Who here has done that work? That's simple, basic. Going back every day as far as you can and looking at every time at the DAX, for example, or the Dow took out previous day's high. Would it continue? Would it go sideways? Would it go down? Would it go down and up and down? What would it do? Now, I didn't do any of that work, and hence my performance was really not showing a performance improvement, in line with how much navel gazing I did. So, and I was like, still thinking there's something wrong with me. There's something wrong with me. And I kept looking for more things wrong with me to fix. But the only thing that was wrong with me was thinking that there was something wrong with me. And yes, there's always something to improve. I still, after 20 years, almost 20 years being a coach and almost 20 years of working on myself, I still improve because life changes as well, right? The challenges change as you get older. My challenge now is my beautiful mom, like she's getting older, she's in Germany, I'm here. It's like, okay, do I go back to Germany or not? What do I do if something happens to my mom? Right? So in the past, it would have just been an emotional roller coaster, overwhelmed. I would have just not dealt with the problem. Now that I have learned strategic thinking and what I call protective pessimism, I can really find a way in terms of thinking it as a framework, through it as a framework, a structure. So my thoughts don't go shooting off willy-nilly, and my emotions don't go like, putting me through the washing machine. It's a strategic thinking of, if something happens, I'm going to be prepared. But as long as my mom is still fit, I don't need to take any action. So now I don't need to be afraid. Would I like that something happens to my mom? Of course not. But that's, another version of acceptance, that I might not like what my choices have to be, but I do it because I rationally have thought it through, and I have taken a conscious choice of, it is what it is, and I'm going to deal with it. And that's the same with a losing trade. That is what acceptance is. Yes, it's annoying. Yes, it's frustrating. I had a really interesting chat with Chris DeMacro, Chris Stover. Chris DeMacro is his Twitter handle. Yesterday, he's going to be on our trading battle with Alex from Macro Ops, and Blake is going to be the host. So it's going to be the Marines battle. It will be so interesting because he said, I asked him, how do you deal with, do you have emotional upsets as well? He's a very strategic, systematic trader, just complete systematic. There is only if this happens, then I do that. There is no discretion at all. And he said, I could have a string of, 100 losses. And of course that creates frustration. And then he said the keyword, he said, but I don't allow myself to buy into that. That's acceptance. Yes, I feel frustrated. Yes, it's not giving me what I want, but I'm not going to argue with it. It is what it is. And I know my statistics, he said. I know the day will come. And usually what happens in his equity curve, it goes up, and then he has this string of losses, which is usually just a little, I call it a little bull flag, going down. And then he said, usually what happens afterwards is that we have a massive steep curve in the equity coming out of that. So when he is in that losing string, he has done exactly what Linda said. Go back and do the stats on your system. When he gets frustrated, he reminds himself, doesn't matter, it is what it is, because you know the day will come when you then have a massive move out of the equity curve bull flag. If you have an equity curve that is zigzag like this, then you know that your Sharpe ratio is too out of whack. So the Sharpe ratio shows how smooth and static and consistent. That was a German word, by the way, stetig. How smooth and consistent your equity curve is. That's what you want, right? Consistently profitable with all those little losses in between. And it is possible, it's not necessary. Like, I have traders who have massive drawdowns and still have an up-running equity curve, but it serves their mindset, like they're able to endure it because they have a lot of mental toughness. Or I was working with a trader who, that was beginning of the year, he went through divorce and he had a massive drawdown, high six figures. Now he just sent me a message, and I worked sporadically with him, just as he needs me. And he just got a message that he just joined the 7-figure profit club. And I was so incredibly proud of him. Like, it's not what I did. Like, I did nothing. I'm just here giving him, support. But you can see he trades alone from home. No one knows him. No, he doesn't want anyone to know who he is. But it is possible. And so when you go through divorce, of course, this is so taxing. And I chatted with Linda about that. She said, yeah, when I went through divorce, everything, went to shit basically. And, plus her husband froze her assets, so she couldn't actually trade. Ex-husband now, thank God. And her current husband is just such a sweetheart. Damon, I just love those guys together. They're really sweet. But you can see that life still throws challenges at us. And it's about when you learn to think in frameworks and when you learn to think in consequences and be prepared for what happens, what can happen, that's acceptance, then you don't need to be afraid of life because you can dig yourself out of it. Now, so if I had done that work parallel with my navigate, there was a lot that I needed to work on myself, right? The high neuroticism that I showed, that did not work for trading. The impulsiveness that I had did not work for trading. I really needed to learn to heal that. There was a reason for it, right? Childhood trauma. Even though I had a great childhood, I can't even imagine people who had horrible childhood would go through. So, but if I had done that work parallel of doing the statistics, I would have become successful so much faster. Now, also remember when I started trading, I still had to pick up the phone and call my broker. There was no such thing as online trading. So shows my age, right? But then shortly after, CFDs came onto the market. So they started here in 2003, and so that changed really the landscape of brokerage, but it didn't change my landscape of profits and losses because again I focused on the safe problem. There's something wrong with me. I need to fix that. I need to fix that before I can become successful. So I want to encourage you, if you think there's something wrong with you, it's not. Is there always more to learn? Yes. So I want to show you, I'm going to share my screen now. I want to show you this one here. Share. Okay, so I can't see the chat box now. So David, if there's anything coming up in terms of questions, I would appreciate if you could alert me to it. By the way, I don't do a pitch at the end. I never do pitches. So we can really go to the very end with questions if you have any. So the question you need to ask yourself, who is driving your trading decision? And so with the boom and bust, I was working with a phenomenal trader from Switzerland. Oh my God, this guy. So he boom and bust cycle. Now he turned a $300 account into $15,000 or Swiss francs. He turned a 10,000 Swiss francs account into 1.3 million, and then right back down to 500,000. So by the way, the 300 into 15,000, he turned right back into zero. So the turning it down to 500,000 was a performance improvement, wasn't it? So, but not the point, right? The numbers don't matter. It's the boom and bust cycle. Boom, bust, boom, bust, boom, bust. I'm like, what is going on here? And again, I did the same 3 steps. Step number 1, we went together through his stats and looked at what is the real problem here? Mindset, skill set, or lack of experience of what markets we currently deal with. Now, the funny thing is, he created those results independently from the market. So he's trading for about 10 years now, and so he turning the $300 into 15,000 was in a bull market. Turning it right back into nothing was also in the bull market. Turning into 1.3 million was, didn't matter what market. So I knew that wasn't his experience. That was the problem. You look at his skill set, meaning when he enters and exits, how accurate are his entries and exits? Not that I'm keen on having it to be accurate. I don't really care. But it's still something that I look at. Is the entry and exit a valid entry and exit, or is there something that we can work on? But you know what, he was doing pretty well there. So again, it wasn't really something that I thought I can contribute in terms of skill set. So it was clearly a mindset thing. So when you experience whatever you experience in your trading, it doesn't matter, boom and bust, in terms of letting your losses run or not letting your profits run. So your profits become smaller than your losses. And so your probability statistics are out of whack. If you go on tilt or if you martingale. So with martingaling, if you guys don't know what that means, is adding to a losing position. So what I see how traders do that is let's say they have a losing position. Let's say they went long when the market came down, and then the market came down, and then they see a bullish setup, and then they say, oh, now is a turn. So they add another trade, and they promise themselves to take the loss if the low is being taken out. But again, they don't take that loss. They let it run because they can't get themselves to press that mouse button. Then they see another bullish setup. And they're like, I will do it again. I'm going to add to my losing position. I'm going to buy in again. And I promise myself I will get out if the low is being taken out, if my stop loss is triggered. And again, they don't do that. Now there's doing a martingale strategy that is actually working. And I've seen a lot of my 6-figure traders, 7-figure, don't have that many except the hedge funds. Hedge funds wouldn't trade like that at all, or the ones that I work with, let's say it this way. But they would martingale into a position as long as the thesis is still right. So for example, they were short as the market, one guy specifically, he was short as the market turned in beginning of the year. Then we had this little retracement, right? So where the market rallied back up. Now he added to his short when it made a lower high. So you could say, okay, his position was now in a loss, but that was okay because the thesis of the market context was still, it has to go down. Now, if he had added to his losing position and then the high being taken out, he takes his losses. He doesn't have a problem to take his loss. So there's martingaling that helps you to perform better, and there's martingaling that screws up your life. Definitely, like I've seen, traders losing everything, the house and the family, by adding to losing positions and not managing that. So it's not the adding to the losing positions that's the problem, it's the not managing it. And so it's the same, it's not the not accepting your losses that's the problem. It's not about the money, it's not about the trade, it's about not accepting yourself. That's the problem. the negative self-image, right? And so that's what I want to explain to you now, how that negative self-image impacts our trading. And by the way, we can have a positive self-image in one area and a negative self-image in another area of our life. So it's not like this one thing. It can be really different in different areas. So hence, I would have clients who have been successful businessmen building multi-million-dollar companies. But when it comes to trading, they're in enormous pain, losing, like one guy, he lost $20,000, which is nothing for him. He's a multimillionaire. But he had so much shame and anger and frustration about it. He's like, I lost the equivalent of a small car, And like, yeah, but in the context of your wealth, it's like $20 to me. So what's the pain really about? Yeah. So what happens when we are not able to do what we know we must? You need to look at who's driving your trading decisions. So this guy in Switzerland, right? He had a significant emotional event when he was 10. Now we all have that. None of us has been able to escape childhood unscathed. For some worse, for others less. Like my childhood was actually awesome. Like I had a really great childhood, and yet still, had so much negative self-image. So it doesn't matter what the event was, just identify what age it was, because then you know who's driving your trading decision when you're not doing well, meaning you know what to do, but you don't do what you know you must. And so he had a bike, and he was being a little crazy on his bike, and he fell and he hurt himself, and he also destroyed the bike. And he went home, with his wheels being broken. I don't know what he did. And his father got so angry at him. He said, how can you be so stupid? And, to add to that, he actually gave him a beating. So that was the first time that his father beat him, actually. Why, it doesn't matter. But that was a traumatic event for him. So now we have that significant event, and we make the decision, I will never, ever want to experience that pain again. So now I'm going to do everything I can to not be seen as stupid and to not screw up, because I know that will upset my father, or the magical big person that needs to protect me, because as a child I'm vulnerable. So that's when the genetic survival instinct kicks in. And that is then the creator of the protector. The protector is our ego, wanting to protect us from going through that pain again. And as a child, our ego is serving us most of the time. It's really protecting us. But as an adult, then it does completely the different thing. It creates the very thing that we are afraid of. So for example, when I worked with this trader and I said, so why don't you take your loss? And we digged a little deeper, and he said, I feel stupid if I take that loss. And I said to him, so you don't want to feel stupid? And he said, yes. And then what happens when you actually bomb out? Do you feel stupid? And he said, yes. And I said, so in its attempt, safe problem, to not feel stupid, you actually create the very thing that you're afraid of, being stupid. Or in German we say, was man befürchtet, das tritt auch ein. And I found that as I get older, a lot of things that we have in German and also in English language, they're actually really true. And before I was said they're just sayings, but it's not. So the ego kicks in and wants to protect you. And the ego is then the one who starts monkey mind, going to the future, going to the past, don't wanting to experience the fear and the regret and the pain. In the past, that's what you experience. So what our brain constantly does is it compares what we are experiencing right now. All it can do is comparing it to the past, because that's the only memory bank it has. And then wanting to prevent happening that in the future. So constantly it's like past, future, past, future. But where's our power? Right here in the present. And Linda said she never cares about the past and worries about the future. What happened, happened. And this is really true. Like she would send me a message on Skype and saying, damn it, I wasn't this trade, and I left the $10,000 on the table. And let's say I was in a coaching session, I come back like 3 hours later and say, oh, dreads, you know what happened? She's like, what do you mean what happened? It's like completely forgotten. She just voices it and she wasn't even aware of it. And then it's gone. So you can see that's the power then when you make a bad decision in your trading to move forward and to make up for it. Doesn't matter, right? Because you have the skill. If you don't have the skill, you go out and practice. Really simple. And so after the ego comes the self-judger. So when we get a little bit older and we have a little bit more control over our faculties and standing in life, then we say, in order not to feel stupid, I need to learn more. I need to study more. And instead of practicing what you already know and doing that really well, the trader then goes out and learns more systems. So doing well, then screwing up, and then going to a new teacher and learning something new. Doing well, screwing up, getting another course. And so you see, it's constantly thinking that you have to improve and looking for tools from the external world rather than looking back and saying, who is driving my decision? Is it a 10-year-old child being afraid of being punished? Or is it, and that's trading in the zone. So where nothing is good or bad, nothing needs to be accepted or forgiven or not. You have no mental chatter. There's just focus and quiet. There's nothing you have to prove to anyone, like I have to prove I'm not stupid. I have to prove that I can make it. There's nothing to be proven. And that's then when you can trade from your integrity, from your wisdom, from your experience. And when you are in the zone where you're like, I just know this is going to happen. And it's not no monkey mind trying to explain to you why it has to happen or why it should happen. There's just quiet and peace. And that's when you know you're in the zone. And that's to get to that state, you have to understand what happened. Doesn't matter why, just the awareness of it, it starts losing its power. And then challenging your protector and saying, are you really protecting me by not taking that loss? Because what is really stupid is not taking that loss. When you take that loss, that is a very smart thing. So you need to re-educate your ego. I'm saying re-educate because I have traders, clients, they have an ego the size of Matterhorn, like a mountain. And they are not very nice people, but they're incredible traders. It doesn't matter. Your ego can be your greatest supporter, or it can stop you in your tracks. It's up to you to train it like a little puppy dog. And then your self-judger, where it's like, okay, do I really need to improve my skill? Let's look at my statistics. Yes, I can do better here. All right, let's do it. Or is it a mindset thing? Right, I need to go back to that level and look at where that pain is. And in order to heal, you must feel. And what most traders don't do is to sit with their feelings. And I would suggest you, I'm running out of time, of 3 minutes. What I would suggest you is when you're in pain, put your right hand on your heart and then check where in your body do you feel that pain. For most people, it's the solar plexus. For most women, actually, I'm generalizing here, of course, put your hand on your solar plexus or wherever that pain is. Funny enough, interestingly enough, for many men, it's in the shoulders or in their head. So then it's a little tricky, having one hand on your heart and the other on head, but you'll find a way. So wherever it is and what that gives you, it's like a soothing effect. And you learn to self-soothe. You learn to give yourself that your parents didn't give you, or your caretaker, could have been a sports coach, doesn't matter, a teacher. The caretaker in that moment didn't give you the thing that you needed. So you can start doing that for yourself. And when you start doing that, especially here on that between your eyes, and when we are upset, we put our hands, right? That is a soothing effect. And so you can start soothing, and we call that a nurturing effect, where you parent yourself, reparenting. If you Google that, there's lots of skills. And the more you reparent, the more you are at peace with yourself, at peace with your past. And that's when you have access to trading in the zone, to your wisdom, to your higher self, whatever you want to call it, when you just know, you look at the market and you just know. And there's no fear. And there's no fear of taking a loss. There's no fear of letting the profits run. You just do whatever you know is the right thing to do. So as I always say, every losing trader, every profitable trader has a dark past, and every losing trader has a bright future. And so with that, I would like to conclude my presentation. I can't find